All right, so today's news focuses on some SpaceX stuff. So today we're going to look into a couple of articles here. This one, let's get rid of these ads. And this one's from a site called A-Invest, and they got all kinds of junk on here. Get rid of that. All right. So Falcon 9 Revolution and the effect on investors, and satellite expansion and the implications on the overall space economy. So we have these two interesting articles, Trend Pulse Finance, that paint an interesting picture, basically showing SpaceX's dominance and the massive impact on the burgeoning space economy. So what's the key takeaway? Well, SpaceX is not just a rocket company anymore. It's a foundational infrastructure asset. So it's fundamentally rewriting the rules of the commercialization of space. So let's start with the big picture. The global space economy is valued at about $600 billion in this current year of 2025. And if you follow that trajectory out, by 2032, 7 years from now, it's supposed to break the $1 trillion mark. And at the heart of this explosive growth rate is the company SpaceX, which has been able to master what these articles refer to as the infrastructure flywheel. So what's the infrastructure flywheel? It's this self-reinforcing cycle where first you have the reusability part. So a week or so ago, August 28th, the Falcon 9 rocket completed its 30th mission, which was a first for any orbital class rocket. So this isn't just a technical milestone, it's an economic game changer. By reusing boosters, this has allowed SpaceX to totally slash the launch costs to under $30 million per mission, or about $2,700 per kilogram. So to put that into perspective, traditional suppliers or providers like ULA or Boeing can charge anywhere from $10,000 to $25,000 per kilogram. Remember, SpaceX is now at $2,700. So ULA's Vulcan rocket costs 5 times more per launch than the Falcon 9. So this cost efficiency that we're seeing is forcing the entire industry to either innovate or be ready to be obsolete. So second, this low cost enables the ability to scale at a massive rate. So with a target of 170 launches in 2025, SpaceX can deploy its Starlink satellite constellation faster than anyone else. And as of just last month, August of 2025, they have over 8,200 satellites in orbit. So this rapid deployment feeds directly into the third part of this flywheel idea, which is revenue generation. And the numbers are pretty compelling. So Starlink serves 7.8 million subscribers, and this is spread out over 125 different countries here on Earth. One of the sources here projects 15.5 billion in revenue for 2025, while the other one cites a slightly lower projection of 11.8 billion for that same year. Regardless of whatever the exact number ends up being, the trend here is still pretty clear. The gross margins have surged from about 7% last year in 2024 to 25% in 2025. So Starlink is not just a capital-intensive project anymore. It's a cash-generating engine that pays for itself. So this self-funding model is a pretty stark contrast to competitors like Amazon's Project Kuiper or OneWeb, who are still grappling with funding shortfalls. Now, let's talk strategy. SpaceX isn't just launching satellites randomly. The articles here highlight this brilliant polar orbit strategy, launching from Vandenberg Space Force Base in California. So these launches specifically target high-latitude regions where traditional broadband is either just non-existent or relatively scarce. So this isn't just about connecting remote villages. It's about enabling an entirely new high-value market. So we can think about autonomous vehicles in Alaska or precision agriculture in Scandinavia, these things that just didn't exist and then suddenly do. So this strategic type of expansion is part of a larger plan to capture what these two articles identify as part of a larger source, sort of the next phase of the space economy. And so this next phase of the space economy is seen to be defined by three key trends. The first is D2D connectivity. D2D stands for direct to device. So by integrating Starlink with T-Mobile's 5G network, SpaceX is now able to tap into a $300 billion market when it comes to mobile connectivity. This will allow smartphones to connect directly to satellites. The second trend is government partnerships, which SpaceX has a solid history of. They have $3 billion in U.S. defense contracts, including the militarized Starshield project. SpaceX has transitioned from a commercial player to a critical infrastructure provider. This diversifies its revenue, and it helps to validate its technology when it comes to high-stakes applications. The third trend is the global market expansion. So SpaceX is tailoring its pricing for lower GDP countries. Does things like offering service for $20 a month, for example, in Zambia. And this will capture 60% of the global population that is lacking reliable broadband. So business side, let's say from an investor's perspective, what does this all mean? Well, these articles would indicate that there's a few ways to approach this. First, you could take a long-term holding position in SpaceX equity itself, or in some space sector ETFs. And this is betting on its projected 20 to 30% annual revenue growth. Or alternatively, you could get thematic exposure by investing in companies in the satellite supply chain. So this would be a company like Maxar Technologies or Rocket Lab. But, and this is not investing advice, this is just implications from the article. But no investment is going to be without risk, even with those sorts of projections. And these articles are pretty clear about the challenges that are still in place too. So you have the regulatory hurdles, major challenge in the US and the EU. They could end up delaying some spectrum allocations. And there's also competition, so particularly from Amazon and a constellation from China that I can't recall the name. And there are also environmental concerns in terms of space debris. And even though SpaceX has already committed $500 million to deorbiting technologies to help mitigate this. However, the sources argue that SpaceX's first mover advantage and its dominance in the market at 60% market share in both the LEO satellites and reusable launch vehicles will give a significant buffer against those risks. So looking ahead, the next frontier is the Starship program. So this fully reusable system is looking to cut launch costs by another 80 to 90% and carry a massive 200-ton payload. So this isn't just about launching more Starlinks. This is going to open up large-scale lunar logistics and interplanetary missions. One of these articles refers to as a $2 trillion opportunity by 2040. So, to wrap this one up, the message from these articles is pretty bold and pretty clear that SpaceX's mastery of reusable rocketry has created this virtuous cycle of lower costs, faster deployment, and accelerating their revenue. So the company is leveraging this operational dominance so that they can build a foundational infrastructure asset that is reshaping global connectivity and positioning itself to dominate the trillion-dollar space economy. For investors, the question is no longer really, should I participate? But as one of the articles states, how do you avoid being left behind? So take that for what you will. So that's all we have for AstroEconomics today. Join us next time and we'll continue to explore the business of space.